Hello, this is Dima Kats. I'm the CEO and the founder of Clear Junction, and I'm happy to have this crypto regulation in the UK session started. Really, we have super interesting discussion today, and it seems like the timing is really, we couldn't think of a better timing because we wanted to speak about the future of the crypto regulation here in the UK, and it seems like the future is here, and the future started about 50 minutes ago, following the announcement made by Rachel Reeves at Innovate Finance. But before we jump into that, let me first say a few words about our participants and about what we actually doing here. So just to start off, to share a bit of our view at Clear Junction, we see crypto in general and stable coins in particular as a huge opportunity. But only if it's backed by strong compliance. That's why we work with analytics partners like Crystal and value expertise from the professionals at CMS to make sure our controls stay ahead of what's needed. We're also seeing a lot of payment institutions adapting to meet the crypto demands, and it's exciting to be part of this change. And that's the reason why we're running this session today. It's part of our masterclasses that we started several months ago, just to keep our regulatory awareness central, both for us and for our existing and future clients. With that, let me do some introductions. First, Sam Robinson. Really pleased to introduce you, Sam, here. Sam is a partner at CMS and is a leading expert in the UK financial services and crypto regulation. With a background that includes time as a regulator himself, Sam really understands the regulator's view and how the landscape is changing. A small disclosure for me, we've been working with Sam. Clear Junction has been working with Sam for about 8 years, and we definitely wouldn't be here if this relationship hasn't been successful. We have Marina Khaustova, the Chief Operating Officer at Crystal Blockchain. Marina's expertise is in blockchain analytics and compliance, and she works closely with firms on how technology and data can help meet growing regulatory expectations. And Marina is joining us from Dubai, from luckily sunny and not rainy Dubai. And finally, we have a special guest, which is a surprise, Claire Wemers from Amsterdam, from CMS Amsterdam. And Claire specializes in capital markets and crypto regulation in Europe. And she will give us a really valuable EU perspective as part of this conversation. So with all this, let's start with our first questions. And Sam, if you can say a few words about what's expected, the milestones of the upcoming crypto regulation here in the UK. And I hope that you had some time to read through the newly announced regime, and you can provide also the most recent updates on what we are supposed to expect here.
Thanks, Dima. Thanks for the introduction just now. Much appreciated. As you say, there's been a lot going on in the UK today with the announcements. So this webinar is very well timed because we now have, I say, something very topical and fresh to talk about. Say the new regime was actually published, say, within the last couple of hours. So you can imagine that I had to rip up my previous presentation and say not quite start again, but really update so the developments of what's taking place today. But perhaps just to set the scene, it might be useful just to go back in time slightly as to how we got to where we are in the UK. And there's really been two key developments up to now, which I'm sure those that work here or familiar with the UK will know well. But we've got the crypto AML regime, say, as many other jurisdictions do. And that came in back in 2020 with the registration that's required and the AML obligations. And then in 2023, we had the crypto financial promotion regime, which applies to any marketing relating to crypto assets. And that's at the high level what we've got at the moment. We can discuss those in more detail if it's helpful, but that's in effect the regime as of today. And in December last year, the UK government and the FCA published a roadmap for the future of the regime, which includes quite a lot of policy statements and consultation papers being published this year, with a view to then implementing the new regime in 2026, 2027. Now, we had the first consultation paper that came out in January to do with the emissions regime and market abuse, which applies to crypto asset firms. But at a very high level, the intention is to bring crypto assets within the existing framework for financial services. So for those that are familiar with, say, the regime for people that trade shares and bonds and so on, that regime under the Financial Services and Markets Act, that's in effect where crypto assets is going to land in the future. So many people refer to this as the UK version of MICA, which is coming down the line. And what we had this afternoon published was the draft legislation that will really set out the perimeter for the new regime. So by that, I mean the legislation which sets out the activities that are going to be caught by the new regime, so that we know kind of where the perimeter will sit in regards to people being inside and outside. And there's a couple of key points that it might be useful just to discuss while we are on this point. The first one is, I mentioned that we've got the crypto AML registration in the UK at the moment. So firms that are UK based need to be registered to carry on business here. What the new regime is saying is that the FCA is going to have a 1-year application window for firms to apply for the new regime. So that includes existing firms under the AML regime and any new firms that wish to apply to be authorised here. But legislation makes it quite clear that from the commencement date, the FCA must go back at least 1 year to allow an application period so that firms can apply in good time to allow the FCA to process that. As to where that date is, we still don't know because it's a moving target at the moment, but we know that it will be 1 year back for the application window to open. And that includes for existing firms that will need to apply. There isn't any kind of grandfathering as such over to the new regime, but say firms are allowed to apply. And for those that say that there's a regime for those that might not make it through the process and in regards to how to say wind down the UK business, but hopefully firms are not in that situation and everybody goes well and makes it through the authorization process and then say has to comply with the requirements. But a couple of key points, like I said, the first one is geographic scope, because those that have registered for our briefings will know that we mentioned a few times that the plan was that the so-called overseas persons exclusion that we have would not apply here. So it means anybody who's based overseas that wants to target UK customers would need to apply for a UK license. And that's different to what we have in the investment space. So it would have been a stricter perimeter. However, the good news is that is changing. So one key point that is set out in the proposals is that say it's generally very similar for if you're dealing with consumers, whether directly or indirectly. But if you're dealing with institutional business, then if you go through an intermediary, then you can avoid having to fall within the UK perimeter. So these are positive developments because it does mean that you need to have in effect one regulated firm in the chain rather than many in the chain going forward. So that's a key point that's worth bearing in mind here. And say we are busy writing a briefing that will be published say shortly on these sorts of points. So if you're not already on our mailing list, then feel free to get in touch. We can send that over to you, but that's one of the key points to mention. Other points to mention is, and without going into too much detail, there's definitions of what will be a qualifying crypto asset and qualifying stable coins and so on, and the distinction between the two and e-money in particular, so that stable coins are not going to be classed as e-money. Then there's quite a lot around the activities. One point that's worth flagging is DeFi. There is a paragraph around DeFi where the FCA has simply said that where there is nobody seen to be undertaking an activity by way of business, there's nobody to regulate. So that's the extent of the comments on DeFi in the regime. But there's quite a lot around that in here. a couple other points to mention is people that are within the crypto AML registration will say that regime will just fall away because it will no longer exist for crypto firms. But a lot of the activities that are going to be regulated are those that we were expecting and were set out in previous consultations, such as dealing in qualifying crypto assets as principal or as agents, arranging such deals and staking and the like. So the activities are very much as expected, but the kind of geographical scope and so on, say, is a pleasant development and really supports the UK's regime for growth. As people would have heard, there's been a lot of talk about growth in the UK, and a lot of these changes are pushing that agenda.
Well, I can tell you we have over 200 people who registered for this webinar, and quite a few of them are outside of the UK. So what you telling us about the geographical, the changes in the geographical coverage, that's, I think, really relevant for them. Is there anything else you think you can add to those who are not from the UK and they're listening to you right now?
I think that's the key part, is if they would need to think about who they work with in the UK right now, because if they're working with someone who is or plans to be within the new regime and then going through a regulated intermediary, they will save them being regulated themselves. So that would be a key point to think about as the regime develops.
Okay, let me switch over to Claire. Claire, as you know, we're very competitive here in the UK, and we want to have the strongest regime possible. And we're looking at what happened in the EU just recently. And we want to compare what's coming up here to what you have rolled out in recent months. So when you listen to Sam and when you learn about the plans here, where you think will the UK be at the end of this at the end of this process of this rolling out this regime? Are we going to have a stronger regime? Are we going to be more attractive for entrepreneurs and investors? Are we learning anything from the experience of our neighbors in the European Union?
I think it would be interesting to find out all the details about the UK regime. But in Europe, we have MICA, of course. It regulates the European crypto asset market and also covers crypto assets that were previously outside the scope of financial regulation. But I think when you look at the timing, we are ahead of the UK because MICA already applies. So it's already possible to apply for a license. So far, various licenses have been granted. In the Netherlands, it's possible to apply for a license as of April 2024. But also in Europe, I think it was clear that it was not easy, this regulatory process, because I think the first financial action plan was dated 2018, and the MICA text has been approved in 2023 and only applies as of this year. Well, as Sam mentioned, to the UK regime as the UK version of MICA, I hope that is true, because I think that would be really helpful for the market, because also in Europe we do not have the overseas person exemption. So if you want to become active in Europe, then if you want to approach European investors, or if you want to work with European counterparties, you need to have a MICA license. So I think it would be great news if it turns out that the UK regime will be very similar to the MICA regime, because then it will be easier for parties that want to become active in the UK and in Europe to get both licenses. And I think that would be great for the market and, well, to the extent possible, efficient.
Great, thanks, Claire. We're going to have several polls during this webinar, so I'd like to ask to run the first poll now, and I'd like to ask the audience, well, number one, to answer our questions, but also to send us some questions. We will leave some time at the end of this session so that questions submitted by the audience can be asked to our panelists. So please don't be shy. Send your questions over in about 35 minutes. Some of these questions will be picked, and Sam, Claire, and Marina will try to answer them. So Marina, with your experience in the regulations across the pond in the United States, and with your experience in how firms follow these regulations, this whole discussion about the new regime in the UK or the experience of MICA, when you compare that with what's going on in the United States, does this sound interesting at all? Because when I read the news from the United States, it seems like on the regulatory side, what's going on there is really a sort of Wild West where firms can do so much, and there is some guidance, especially on the, but the guidance is hardly felt, especially on the federal level. So if you can give us some perspective from where the real things happen, that's across the Atlantics.
Oh yeah, sure. Yeah, that's really interesting for me to observe that, especially being an entrepreneur myself. I started like 3 businesses myself, 2 of which were crypto related. And one of these businesses I started in the United States, and we had to kill this business, especially because of the regulation. Basically, the crypto winter started, and it was clear that no businesses are willing to do compliant businesses in the beginning of the crypto winter in the United States. That was 2018. Of course, like what is happening right now, and also interesting, for this conversation, that these implications they led to the fact that I relocated from United States to Europe, and with Crystal, we are very much focused on Europe at the beginning. Now we're serving globally; it's easier for us. But yeah, what is happening right now, these calls for deregulation, of course, sounds attracting, especially, whenever we talk about the regulation, it's important to define, the regulations exist to protect specific audience. Let's define who we are protecting and from what. Crystal is specifically focused on AML and CFT regulations. So we are very much interested, on like how the whole world can follow, same policies. And like, I'm looking right now at the United States, right? So we are having this new administration, which basically takes specific steps to streamline the federal oversight and to bring much more cohesiveness, right? So basically a lot of big actions, really have been taken. So now banks, do not need to get approval before they are engaging in crypto activities. And that's really, really a big step. Then we see the upcoming special Genius Act towards stablecoins. And it was very interesting for me to hear from Sam that there is a lot of like attention also put to the stablecoins now in the UK regulation. So it all, like these big steps, they're very, very loud, and they, of course, they intend to bring, the whole country together. However, what do we see like happening in reality? US is very fragmented, and in this sense, like it's this fragmentation we see it also in Europe as well, right? So in US, you see. In general, like Wild West happening across the whole country. We didn't expect that kind of deregulation to happen. But then there is Wyoming, which is a Wild West among Wild West, right? Pun intended, in a sense that, some states want to be much more progressive and specifically keep in mind builders, people who are thinking like technologies, and people who are developing, something new, and they really want to foster like innovation there. While there are like other states who are much more focused on the other category of the companies and of the businesses. I mean, traders, for example. I mean, banks who are adopting digital assets as a part, of their payments system, etc. And stablecoins are playing quite a significant role here. So I would say that while there is a federal move for cohesiveness, states will have to figure out, how to protect themselves locally one by one. And by protecting, I mean a specific, that's our area where we are operating, right? We see that, of course, deregulation leads to a lot of activities which we will discover maybe a year ago, maybe 2 years ago. We'll discover specific Ponzi schemes or scam schemes that are developed right now that will be abusing, this kind of situation that is happening right there. And what I mean by the consequences, I am thinking that, 2 years later, would we have enough trained law enforcement and enough enforcement units, particularly in the United States, who would be able to, again, untangle all of this, understand what is happening, and again, convert these into some actionable steps? Unfortunately, I don't have a good answer to that question right now, and I don't see, the tendency for increased education across, these enforcement units at this moment, which bothers us a lot. And ultimately, this will impact the whole world, right? And jurisdictional arbitrage is happening anyway right now. Countries are competing who attracts more new startups, and some countries are in Europe, for example, MICA makes it very, very hard for new businesses who have not existed before, right, to enter this space. Cost of application, getting a license in UK is also quite prohibitive. Not the application itself, but all the legal support for that. So of course, if you are an entrepreneur, if you're in crypto, you have in mind specific tech. You need to validate product market fit. Then, yeah, your choice will be quite obvious. You're going to either United States or you're going to Dubai, or you're thinking about particular territories in APAC. If you're following your audience, right, if you're bound to your audience and your audience is located in specific territories, then it's a completely different story, and it activates a completely different set of scenarios. And the most interesting cases of our customers are the ones where customers are expanding, from Europe, trying to get a little bit of United States as well, or vice versa. And these activates quite a lot of interesting scenarios, particularly in cryptocurrency exchanges.
Okay, interesting. So you mentioned the regulatory arbitrage across different geographies. Now there is one geography where this regulatory arbitrage can definitely happen already. I'm speaking about the European Union. Claire, since businesses can get licenses in different states and have access to the whole European market, so do you see any cases of regulatory arbitrage, or do you foresee any case of that? And I think you probably specifically well positioned to answer this question, because it seems like the Netherlands has been one of the major countries that has provided the MICA licenses so far.
Yes, well, indeed, MICA is a regulation, so it applies in all European countries, and it provides for a European passport. So you can indeed select the Netherlands to apply for a license and be active in France, Italy, and all other European countries. So I think, yes, there is a risk, and you see that some regulators are front runners because they have already an application process. You also see that there are differences for the transitional regime, 6 months or 18 months. So yes, there are differences, but I think that should be minimized by guidance from the European regulator that, well, in theory should be applied by all competent authorities. But I think it's fair to say that there is such a risk.
But you know what? Let's get practical. Let me ask you this: if you were a 25-year-old tech entrepreneur living in, say, I don't know, in Slovenia, and you wanted to set up a crypto business, and you could travel anywhere in Europe, where would you go to?
Good question. Of course, I would say the Netherlands because I'm from Amsterdam. But there are substance requirements, and those depend. So some countries ask for well, 6 to 8 people on the ground. So then it's not sufficient that you travel around. Or some countries have very light substance requirements.
Well, you know, fine. Assume you've got no family and you can travel.
Yes, well, if you want to have a license within within a year, I would come to the Netherlands. Well, if you want to save money on the ongoing supervision costs, maybe it's better to look in the east of Europe. So I think it's really difficult to say which country is the best. But I would definitely select a country that has a regulator with a knowledgeable and active regulator.
What I'm gathering now is that it seems like there is clearly, and it's good for consumers, it's good also for businesses. It seems like there is quite a bit of competition now between different countries or groups of countries. And all of them wants to be attractive for entrepreneurs and investors because clearly the crypto market is booming, and clearly there are so many business opportunities there. And it seems like the most recent development here in the UK that we just discussed a few minutes ago about the new announcement is also an attempt to make to make England great again, and to make the UK the best market for fintechs. So and there is definitely the competition between different countries, different regulators. And when we speak about the competition between the regulators, one of the major things that comes to my mind is the amount of the red tape that the businesses need to deal with. And a lot has been said in the recent months about the red tape, specifically in the financial industry in the UK. And our government has demonstrated that they would like to reduce the amount of red tape. They would like to help businesses to thrive. They would like to attract talents and businesses and investors into the United Kingdom. So with that in mind, if we look at these initiatives around the crypto regime here in the UK, Sam, if we look at that through the perspective of the amount of the red tape, what do you think? Do you think this regime here will have the entrepreneurs in mind, or will it only be worried about protecting consumers?
Good question, and I suppose it doesn't really relate to what's taken place today, because today is very much around the perimeter of what's in and what's out of the future regime, but more around the FCA and the government's approach to crypto generally. So we've heard for many years now how the government would like to build a crypto hub in the UK, as other jurisdictions have been able to do, and have been making movements in the right direction. And last month they published an action plan, which they always do, in regarding the priorities for the next 5 years. And within that action plan, crypto was mentioned in a few places, including creating a regime which was, I forget the exact phrase, but fit for purpose, commercial, and in short, Dima, going in the right direction is what you described, to remove some of the unnecessary red tape which may have been added to the system throughout the years. And they've been doing that, in a few different places. For example, anyone who's ever received a Dear CEO letter from the FCA, they use those in quite a lot of detail over the years to highlight different matters. They published last week they're not going to send those out anymore to regulated firms. So that's one less kind of supervision red tape that's taking place just generally in the financial service industry.
Are you saying no DSAO letters anymore?
No, that's in the past. Yes, they'll go. So points like that. So I know you'll miss them, but they are. But there's a few areas like that where they've worked out that they're maybe no longer fit for purpose, and they're going to remove the historic ones from the websites and only keep those that are still useful. So there is a bit of an exercise taking place to try and only have relevant guidance out there. And so there is a push in the right direction, not just in the crypto regime, but UK regulation generally, to remove some of the red tape and make the regime a bit easier for entrepreneurs.
Okay, that's great to hear. I'm sure they can do more besides just removing the SEO letters. And I hope they will spend this 7.8 million pounds on that. So, Claire, you probably figured out from this conversation that here in the UK we're fairly concerned about when we hear the news from the United States about how things unfold there, with all things related to regulation, or probably more specifically to deregulation. And we see that our government also hears that, and they're trying to reduce the amount of red tape. Is there a similar mood in Europe? Do businesses voice their concerns about the red tape, specifically in the context of what's going on in the States?
Yes, no, definitely businesses raises their voices, but I think when you look at the European regulators, they stick to MICA, and they want to be a solid environment with knowledgeable regulators that observe the rules. So they do not want to remove all the red tape, but they do want to boost innovation, in a safe way, bearing in mind the interests of consumers. But we definitely hear those voices from crypto businesses.
Do you think the European regulators also hear them?
Yes, I think they do, and I think they are obviously looking at the US, but I think they also want to make sure that there are no major frauds with crypto, so that they need to find the balance between an innovative environment, but having some regulations in place to avoid major frauds.
Marina, over to you. We're speaking here of the existing regulatory regime in Europe. We're speaking here about some upcoming regime in the UK, and there is some guidance in the United States, and there are some things that are similar, some things that are different. When you in Crystal support your clients with when you need to screen transactions, when you need to run your risk assessments, does it really matter what kind of regime your client needs to comply with, or are these requirements relatively similar, and the same transaction will score the same regardless of where your client resides?
Yeah, a very interesting question, and leading to a lot of research actually that is happening internally. I would say, to answer your question, when we speak about ML and counter-terrorist financing measures deployed in any financial institution dealing with digital assets, I would say that here everything is mostly boiled down to FATF, right? And then there are like variations, there are differences, but more or less the general direction is there. However, there are like complications that are rising around like everything else, that surrounds AML and CTF. We are not the only solution that firms like you, like Clear Junction, utilize on your side. You need to take data from Crystal, you need to take your data from your KYC provider, you need to monitor your customers' data, you need to file suspicious activity reports, you need to be in talk with your regulator, and you need to do a lot of other things. And compliance is not only, again, focused on AML safety. And that creates like a lot of like other implications. And this environment is very, very important. And also in general, like the mood and the, these dynamics of the conversation with the regulator is very, very important in this case. And here I see a lot of differences, by the way. Specifically in UK, what I hear a lot is that particularly regulators in UK are not so much, open not open, so not so much like willing to give like feedback, and it's very hard to be in like a conversation. It's mostly like usually just one-way straight conversation. What Claire mentioned is that you can pick up a country where it's easier, faster for you to get licensed, but also you can pick up a country where a regulator has, a little bit more eagerness to come back to the businesses, to speak to them, to guide them. And in some countries, you see a specific like focus, for example, on startups. I mean, particularly Latvia, who announced that, yes, they would love to see as much young growing businesses, and they're, along with the support from the regulator, they're launching like a lot of accelerators and support from the investment firms. So it's like a very specific niche that they're targeting, and in exchange, they are promising a lot of back and forth discussions about how things should be done. Netherlands, I think, I also like see quite a lot of like positive cases where there's a lot of exchange of information, a lot of guidance coming back to the financial institutions. It's just the state of the financial institutions is very different, for example, from what we see in Eastern Europe, right? Much more matured organizations, much more developed, with a completely different state of development and different approach to compliance. They think about compliance differently. For them, compliance is like out of question, like it just happens. It's just something where you are spending like a lot of effort, a lot of, it's a part of your P&L, normal one. So for startups, it's different. Like you need to convince them, like you need to do things right, you need to do things differently. And here's the differences that I see, especially in Europe. It was interesting last year that we saw an abundance of firms operating, crypto firms, operating in Europe, however, placed in such gray area of FATF and MICA, particularly swaps, bridges, all that kind of guys, who really want to figure out how to be compliant, but they understand that it's like not generally a place for them. And we see an exodus of these guys happening last year from Europe to territories again, like Dubai, for example, to APAC. And I fully like understand that. It's a question of like, what happens next to them and how further, such activities are going to be defined. If we boil down to like transaction screening, yes, like everyone does this. Some companies are better in applying this risk, 360 risk-based approach. Some companies just, figuring out how it works for them. But it is, how they're talking to the regulators. Yeah, mostly.
Sounds good. There are some questions that we received from the audience that we will start asking and answering in just a few minutes. There is a question that I have probably to all our guests today. We see that probably the crypto industry is probably one of these industries that is developing really, really rapidly now. And what we thought about crypto even a year ago is totally different from what we think about the crypto and crypto adoption right now. Even I'm saying crypto, but with many people when I discuss this, it seems like there's different terminology. There is crypto and there is stable coins. And a year ago, when we said crypto, we also meant stable coins. Today we say crypto or stable coins, or crypto and stable coins. It's not always that even crypto means stable coins. So this is just one of these changes, and I feel for our regulators who need to come up with their ideas about the regime and or some regulatory initiatives, and they can't just say, hey, from tomorrow here's how it's going to work. No, they need to start with this consultation paper. And then after the consultation paper, there is this period of time when they need to digest all the ideas, and then they come up with the regulatory framework, and then it takes time till this framework becomes effective. So they need really to foresee the future to make sure that the regulation that they come up with now will meet the progress. The technical progress, or will meet the market in the future when that regulation becomes effective. So my question to all three of you is: do you think that what we are discussing right now those regimes, and the regime in the UK, the MICA regulation in Europe, and whatever they have there in the United States, call it the guidance or call it a lack of guidance. But do we think that these regulatory frameworks correspond to the time when they become effective? So I'll start with Sam. Can you give us your view on how it will be here in the UK, please?
Sure, Dima, happy to. And I can see that some of the questions are along the same line, in the sense of what will the new regime look like, and some of the requirements that might apply, such as capital requirements in the UK. And the short answer is, at this stage, we just haven't got that level of detail, say, in regards to the exact how the regime will look like. But we do know where the regulator is going, and it comes back to one of Marina's points earlier about how the FCA might not previously have engaged with firms in the crypto space. It's quite publicized. It's on their website that quite a lot of the AML applications are not successful. So in regards to your question, and how does it become successful in the UK with this rapidly changing environment, so clearly the soon to be new authorization regime is going to be very important for firms, because that's very much kind of a gatekeeping role of the FCA to get firms through or not during that process. And then it will be the ongoing supervision of the requirements. In regard to Ivan's particular question on capital, there's I don't think that we'll end up in a place where there's no capital requirements. We could do, but it's unlikely. What's more likely is the regime we have at the moment is where there's generally a phased approach to capital, where there might be a floor and then a variable amount based on certain risk characteristics of different businesses. So those are the kind of details which we'll find out more about during the course of this year, which will then really impact how practical this regime is going forward.
Sounds good. Claire, you're probably in an easier position here, because you already know. So you know what, for you, do you think that if the European regulators knew the current state of crypto, would they have come with that version of MICA or not?
Yes, I think MICA, well, it does meet the requirements of the current market, but I think typically regulators are not active, but respond to activities that they see in the market. So I think if there are changes, they need to amend their guidance or their technical standards to meet those market developments. We also see that under MICA there are qualification issues on the scope of NFTs, things like that. I think, well, there will be new qualification issues, new challenges, and I think market parties and regulators and the European Commission, they need to solve those issues by amending the regulation in the future and keep it up to date.
Okay, Marina, what do you think?
Well, MICA has been in writing for many years before it was published. And I was speaking to people from Brussels who've been designing it and then collecting feedback, and it took years. It took many years before it was published. And we are unlikely to see MICA 2, right? 2.0, at least like not in the following, I guess, couple of years. And I think this is the key problem for a dynamic industry. You need a dynamic supervision and a dynamic regulation. And are we able to provide it? I can see a very good example of how it can be done on a smaller scope. And I'm speaking here about VARA, who are doing it excellently, but the question is like, how can they scale? So they're all like 30 licensees, and the way the dialogue between the regulator and the licensees is happening on a weekly basis, it's just astonishing. And it's really very, very different, from what I see in Europe, in a good way. The amount of resources that it takes from VARA, incredible. Would European regulators or UK regulators be able to provide that? No. like you need to issue something, and they need to be in touch, and you need to like also collect and have enough data, enough understanding about the market, to introduce it. And it's, I'm touching it on every level. And it's not only UK and Europe, by the way. In the United States, you see the same. And it was very visible with the sanctions, by the way, when a specific address has been added to the sanction list. And that was it. Treasury said, we're done. But in fact, of course, it was not enough, because the organization which controlled this address invented new structures, new wallets, new clusters, like literally every week, if not every day. And yeah, you need to follow up if you are establishing something, and something that big. So yeah, I would say that I'd love to, and that is why I welcome in a way fragmentation and developments, that are happening locally, because I'm a big believer, that hyper-local strategy works. You need to care about the territory where you're operating, about the audience that you're serving, and that will force you, to make better decisions about, how you're building the strategy of your organization, how you're protecting your organization and, your audience from specific risks. Yeah.
Sounds good. Thank you, Marina. I think we can switch to the questions from the audience. Thank you very much for all those who sent questions. So there is a question here about the equivalence of the different regimes, and whether there will be some permits for cross-border activity into the EU. Just to add something here, what do you think Rachel Reeves needs to come up with to make sure that the British companies can have access to the European market?
Well, I think it's a good start if they call it MICA 2 or MICA UK version. No, I think that's a really good question. I'm not aware of any discussions at this stage that there will be such equivalence regime. We did expect that for the MiFID firms after Brexit. In the Netherlands, we even had the local laws ready that would implement that equivalence decision. But it's still not there. So I think it's a political issue, and we have to wait and see. But at this stage, well, I'm not sure when to expect such equivalence regime.
Okay, Sam, do you think there is any reason for us to expect any passporting permissions besides Gibraltar?
So I wish I could sit here and say yes. However, unfortunately, at the moment, I think we're quite a long way. There's a lot of political discussions that need to take place before there's any passporting of that nature in financial services generally, including crypto assets in the future. So I think there will have to be quite a lot of discussions beforehand.
Do we see any examples of passporting of crypto permissions besides the European Union? If the Marina, does it happen maybe in the States, or do we see? Are there any examples in the world in general where such permissions can be passport to different geographies?
Can speak specifically about the.
I can't think of any. Yeah. There was another question here, Sam, which I think you touched on slightly, but there was a question about the capital requirements for crypto firms to operate here in the UK. I would assume it's probably too early to say anything, but unless you have any insights.
Yeah, we haven't got that level of detail yet, Dima, on that. But we do have some detail. There's a question slightly further up to do with whether you need a UK local company to do this. So let's assume that we have a firm is in scope of UK regime. One of the usual regulatory requirements, it relates to location of offices. So normally you need to have a subsidiary or a branch in the UK in order to apply for authorization. So I think the answer there would be yes, we are expecting the requirement to have a UK presence to apply for a UK license. So we have some detail, but not all of the detail.
Okay, very well. Well, thank you very, very much. We coming to the end of this this session. I would appreciate a short closing note from each of you, if I may. Let's start with Marina.
Well, yeah, a lot, a lot has been said. I think, yeah, some people say that I'm believing I'm too much a believer that regulators can change, but I really hope to see that, and I can see that in crypto space. We must educate them back, and we must also invest, our time explaining exactly how it's going to go. I think we're going to see the same scenario repeating with AI, actually, and I think while you're caring for the territory where you're operating, you must also care about, how a regulator can see you, and how you can interact with your regulator. And yeah, I think that's the key point that I would love our customers not to forget about.
Thank you. Thank you. Claire?
I think it was really interesting to hear about the developments in the UK, and I hope that there will be similarities between all the regimes, globally, so that it will be easier for parties to become active, in the US, in the UK, in the Netherlands, and then, of course, keeping in mind the Netherlands.
Sounds good. Sam?
And a final thought for me would be, say, it's been a busy day in the UK, but it's a good day as well, because things are now moving forward in the right direction. As Claire said earlier, we are slightly behind the EU in many ways, because MICA is already there, but this regime is now moving forward, and the framework is there with the detail to follow later on this year.
Well, I hope that we can leverage the fact that we are slightly behind the EU, so we can learn from the EU and maybe do it better. A closing note from me. I keep saying it again and again. Here in Clear Junction, we firmly believe that for a fintech business, the best investment or the best long-term investment is into the risk management, and the regulatory compliance is a very big part of the risk management. And we welcome the regulatory clarity. It seems like the world has become a little bit better today, because we have some clarity announced by the UK Treasury here, and with the clarity, with the regulatory clarity and enough resources invested into the risk management, I think our future is bright. Thank you very much. Thanks for joining me here. And thanks for arranging this webinar. Best of luck.
Thank you.
Thanks, everyone.
Thank you.